Hello and welcome to the Stockout. This is your show at FreightWaves for all things related to the CPG and retail industries. I'm one of your hosts, Mike Baudendistel, joined by Grace Sharkey. Grace, good to see you. Good to see you at the conference, and I thought we had a good show at the conference last week.
Yeah, it was a good show, good all-around show too, especially some of the big general stage chats as well. But it was cool having, I like the setup this time, like right by the door, so people got a chance to kind of see our smaller shows first, and then you can see those big chats as well. So, yeah, it was a good time for sure.
Yeah, it's amazing how much we cram into 2 days, or even its second day
Yeah.
finishing at 2 o'clock. It's just kind of amazing how much we can cram into just that amount of time. Still going back through reading people's write ups, watching some of the videos that came out of it, those type of things, and thought that our guest on the Stockout, who was Zach Jecklin, Chief Information Officer at Echo Global Logistics, thought he made a really good case for using them as a 3PL. Just their multimodal expertise. It really sort of comes across. I mean, Echo's had a strong presence in LTL since the beginning, and particularly for like a kind of a startup CPG company that maybe is not shipping a tremendous amount of volume, to start out with a 3PL that has lots of LTL experience, and they can grow with that 3PL. So I thought he made about as good of a case as I've heard anyone make on the Stockout for using their service, maybe with the possible exception of Chris Moe, who does the company Cartograph, who helps Amazon sellers navigate the Amazon marketplace and do that profitably. He really convinced me that you can't possibly sell on Amazon profitably in the Amazon marketplace without knowing the ins and outs of the system. So I thought that was a really good interview on the Stockout. And then as far as some of the major, shipper themes, didn't have a chance to hear everything you talked to Kaylee about this morning. But I mean, for me, it was really a lot of this, risk mitigation that I think it's really this growing recognition that we're getting late into the freight downturn, that at some point it shifts. Maybe it's a little bit sooner, maybe it's a little bit later. We're not sure, but at some point you really have to sort of de-risk the supply chains. Heard a lot of that from UPS, who's saying that's what they're hearing from their customers, that they want to de-risk the supply chains. Heard JB Hunt talk a lot about that in the context of their new quantum intermodal offering, getting that to a 97% on time, which is really kind of tremendous in the world of intermodal. Would be good even in a higher service mode, I think. So we really heard a lot about that. And what were some of the other themes that you heard? Some of the other shipper themes.
Well, I totally agree that de-risking the supply chain was a big one, and I think someone had brought it up in one of the chats that I think dealing with these like acts of God and these as we become a little clearly more global society, these situations are going to continue to pop up that affect our supply chain in some way. And so to say like when will it be normal to the point where we're not dealing with these problems? Well, maybe it's not a worldwide pandemic, but as our supply chains become more global and our who we're buying supplies from and our vendors become more global, it's just something that has to become second nature to shippers as well. So totally agree with you on that one. I think another one in particular too is it's just how can we do better for the carriers, right? It came out a little bit more in the shipper of choice type of
Mhm.
chats that we had. How can we better get drivers in and out of our facilities? I think clearly that's great for the drivers. We've been great for their own inefficiencies. I heard more about trailer pulling this time around and getting out of kind of this like live load situation as much as possible, which again I think does wonders for the carrier community when it comes to right hours of service and getting home in a more timely manner, and of course finding truck parking and parking somewhere safe at the end of the night. But it also I think does wonders for planning for a lot of these, especially larger shippers, and figuring out what can you load ahead of time to just get in and out of that facility and not have to worry about timing that specifically with a truck. And especially if you've ever worked as a logistics provider in any of these big shippers and making appointments and adhering to those exactly on the perfect time is can be difficult depending on where they're located too. So that was a big one for me. But just in general, it's really interesting to see if this was like the first event that I've gone to with FreightWaves where the shippers just seem very, very very much so interested in the technology that they can start implementing into their own operations, which, right, as in the work that I do writing about that, that's spectacular. But having actual deep conversations with tech providers, and figuring out what they need to change in their own, kind of back to the shipper of choice, like what do we need to do to fix some of these problems? What does that mean for our operations if we do address it with this type of technology? And what operations need to change with that too. And I think we're seeing more and more of that, and less of these just discovery of carrier or shippers using Excel documents. It's more of, I think, this true revolution of what the shippers are interested in at the end of the day.
Yeah, that really shows a lot of foresight too, because it would be easy for shippers to say, well, you don't really need to invest a lot in supply chain right now. Things are pretty easy, you're getting good service, there's plenty of capacity. But as we all know, things can shift pretty quickly, which is really what I want to talk about now is, the freight market's showing some signs of improvement. And I think the ultimate question is whether or not this is seasonal strength, just this seasonal improvement. It's June, it's the last month of the quarter. If you want to get something shipped, you better book it in revenue. You better do it in June and not July. And some of this is just seasonally, a lot of big items move in June that take a lot of transportation capacity. Even things like the summer beverages, things that tends to heat up. Things like Gatorade, all this patio furniture, lots of sports equipment. So just all that stuff takes up a lot of room in the truck. And so it's kind of a mini peak season in this time of year. And so I think the question is it some of the strength we're seeing in sonar data just a function of that, or is it something more sustainable? Zach Strickland, our head of market intelligence, wrote up an article over the weekend. His stuff is always worth reading. Always make a point to read that. Usually puts out an article every Saturday morning. It goes up on the site. And so he's talking about how the spot rates are up about 4% over 2023. So it's a little bit of a better situation. And then you sort of look at what's happened since late May 26th, the OTVI, so the outbound tender volume, so the measure of electronically tendered requests to move a load, up about 7% in that period of time. He has a sonar chart on that as well. And typically he says you would typically see some strength, but the range the past 4 years has ranged from just 0.3% on the low end to 6.8% at the high end. So this is 7%. So this is kind of at the high end of that range. And then sort of the one comparable year was 2019, sort of that, which 2019 was a weak year, sort of last year before the pandemic. A lot of carrier bankruptcies happened that year. And in that year, the tender volume spiked 8.8%. So even a little bit more in 2019. So maybe that means in a weak freight market, maybe there's even a little bit more seasonality because shippers maybe wait a little bit longer. They figure they do have the capacity to move something in June, don't have to get it moved ahead of time. But then the other sort of positive piece of data point is the fact that the spot rates that went up during right in the lead up to Memorial Day and during that road check week, that those have sustained at that sort of new higher level. I mean, the capacity was still loose enough that it didn't break out from those levels into a new higher level, but still stayed fairly high. So I think we have a chart on that that's with a white and red line, if we could get that up there. But basically that shows that they're kind of at the highest levels since the winter weather, when you had some weather disruptions. So Zach talks about this as being baby steps in his words. Yeah, this is the national truckload index line haul only in white, and you do see the average spot rates rise there from the start of May. Going from about a $1.55 to up to $1.70, so pretty significant rise. And then coinciding with that, you see the tender rejection rate in red. Those have risen as well. Worth noting that on an absolute basis, and those numbers are pretty small, even though I'm using the large font option in Sonar, the tender rejection rate just under 5%. So it's still a loose market, but some evidence that things are improving. I mean, you spent a lot of time in brokerage. How would you interpret some of these data points?
I do think it's a lot of it is seasonality. excuse me. Um, I agree with you in regards to what we expect. Sorry, rough morning. um, there we go, back at it. I think we're seeing a lot of that. Of course, we saw a little bit lower when it came into Blitz Week, and then that increase as we go into the 4th of July. I think, like you said, the quarter is ending too, so I'm thinking a little bit more seasonality. With the election, I just don't see that continuing on. So for now, I'm just going to go with seasonal.
Yeah, I think certainly seasonality is playing a role here, and it is interesting. I mean, when you look at the sort of how the consumer is feeling, and all of sort of the contradictory things, and I really think that on the consumer side, what kind of boils down to is just people are just in very different groups based on income and wealth. I think at the same time you have some people spending, some people cutting back. Some of these CPG companies saying people trading down from the national brands to the private label, brands that are typically about 25 to 30% cheaper. So people care enough about that to save, let's say, $1 an item. And then, another interesting data point that I think is kind of a freight headwind was, some of this, macroeconomic data that came out in April. And it's showing that the spending on services is still growing faster than goods. And that seemed like something that made a lot of sense coming right out of the pandemic. But that still seems to be a trend. So in April, spending on services, when you adjust for inflation, up 2.9%, while spending on goods up 1.9%. So I think that's maybe a significant headwind for freight if that continues. I don't know if that's the younger generation just preferring services over goods. You would think that maybe would have played out by now. And then also, what's interesting is that for CPG companies is this mix of spending on eating out versus eating at home. The portion of eating out is about 53%, which before the past couple of years, it was always a minority of the dollars spent were eating out. So there's still plenty of people that are going out and spending money. Meanwhile, the lower income consumer, which might be more inclined to eat at home, larger percentage of the time, seem to be under a lot of pressure. Another interesting data point was this write up on truckload employment. Now, I know that truckload employment is not a perfect measure of capacity. I don't think we have a perfect measure of capacity, but trucking employment down about 30,000 jobs in the past year, down 5,400 jobs in May from April. So the largest single month decline since August of 2023. So a data point that suggests that capacity is coming out of the marketplace. I mean, does that seem significant to you?
Yeah, now that I have my voice back, so a whole week of talking with people, right, gets me
Mhm.
a little sore the next week. So, yes, and I do want to say too, I wanted to bring up the capacity aspect a little bit as well, because it's interesting when we look at that chart to see where the OTVI is compared to like the holiday season, right? It does look higher than it was then, but I think part of the issue, right, in regards to rejections as well, showing the same trend, is because of the capacity as well. We see more leave, and I don't think it's going to be enough volume to kind of see what we've talked about in the past. Like, will we see this explosion of volume that can't the capacity now can't keep up with it, and it kind of surges back right away. Again, I just think that a lot of individuals past this next couple of weeks, 4th of July weekend, etc., I think will slow down a little bit on that spending and probably on that traveling as well. Of course, there's still August, there's still Labor Day. We'll probably see a little bit of that action too. In regards to the economy, in regards to, I mean, everything that you'd want to look at to see what consumer spending is actually looking like. I mean, you just see most of Americans just kind of holding by with maxing out their credit cards and taking out more and more of that type of help, and I just don't see it bouncing back as high as we hope for. So if anything, again, we I love talking about this industry sometimes. We just kind of have to look at capacity to continue dropping to see the market get back into a better flux. But Yeah, it is interesting to see that huge change, that largest single month decline since August of last year. I think we're going to start to see more and more of that into the summertime too.
Yeah, one mode where things have tightened up is the ocean market. So I have a sonar chart on the Freightos Baltic Daily Index. So these are spot rates to move 40-foot containers, and you can kind of ignore this spike in the middle of the chart there. That was during COVID. May never see that again. But on the right
Yeah.
side of the chart, what really took people by surprise is just how much those rates spiked. So you see that hump right at the beginning of 2024. That's associated with the Red Sea, longer routes around the Cape of Good Hope. And the rates now have bounced back to higher than those levels. I think that is took a lot of people by surprise. There was a good article about a week and a half ago on CNBC, written by our friend Lorianne LaRocco, a friend of FreightWaves and friend of Sonar. She was talking about how there's this emerging shortage of ocean-going international containers, sort of all of a sudden. And so that was an impact. There is disruptive weather in Asia that was impactful, still lingering impacts of the longer, sailing routes, and sort of all those things coming together caused the ocean carriers to skip some of these intermediary stops along the way, which has made things difficult for some shippers and caused those rates to spike. Now, recognize those spot rates are not as volatile as the contract rates, but still tells you there's some disruption there, which is really interesting in the context of some of these intermodal charts. So I want to show international intermodal volume now from O-Rail. So this is from a company that processes the way bills on the railroads, and this they're just limiting to international containers that are loaded. So primarily 40-foot containers that are loaded, and you see the 2024 data series in white, and this has been strong all year. If you compare it to 2023, which is that light blue, it's been up about 20% plus all year, and now here we are in beginning of June, higher than it has been in any of the previous few years, including these pandemic years 2021 and 2022, and so this suggests there's really been a lot of inventory replenishment. Yeah, I don't think the strength is reflected in the underlying consumer spending data or in National Retail Federation or data or those things. So I think this has been a surprise. Part of this is also that more of the cargo is coming in through the West Coast, which lends itself to more intermodal. And so far, the container ship lines have been willing to send those international containers inland intact because presumably they feel like there's been enough container availability. It'll be really interesting to see if this holds up or if this comes down, if those reports of shortage of ocean-going containers really are ongoing. You would think this would go down and would translate into more domestic intermodal loads, which is the next sonar chart that I have, which is showing some improvement here. So these are 53-foot loaded containers. So this is the same market that JB Hunt, Hub Group, Schneider all participate in, and this was up much more modestly in the first quarter of the year. I had this up about 3% in the first quarter. And you see that white line starting in about April started to surge there. I think the 30 days of May were up 3 or 4% versus the first 30 days of April. If you want to look at what's happened from one month to the next, and then it's up a little bit further here in June. And so this suggests that maybe they're starting to see a little bit more transloading at the ports. A little bit more is being put on the rails. It was interesting to see that the intermodal rates have come down. And so if I'm a stock analyst, I'm looking at this, I'm getting a little more positive on, JB Hunt, Hub Group, Schneider going into the second quarter, which they report in July. It looks like they're going to have a really good, at least second half of the second quarter. But what's been interesting is turning to this next sonar chart, which is the intermodal spot rates. And got a question yesterday. We put out a newsletter every Sunday that goes through a number of sonar charts, which I think is available to Sonar customers, and wrote up about how what I just described, how the intermodal volume has improved on the international and domestic side of things. And client came back to me and said, well, how do you explain this chart, which is the intermodal spot rates, which are going the opposite direction. Those are going down. So recognize that small minority of the intermodal volume goes on the spot rates, but shouldn't those be headed in the same direction? And it was a good question. Went back and looked at the data that we get from the data supplier, which breaks it down into 100 lanes, and we get it in about 119 lanes. Out of the 119 lanes, about 105 lanes were down in the past 2 months, so almost across the board. And it appears to me that it's down most significantly, like 30 to 40% in some of the lanes that are competitive with truckload. And look at some of those individual lanes. You might have something like a Chicago to Atlanta, which earlier in the year, the spot rate to go from Chicago to Atlanta was about $3. Now it's about $2.22 on the truckload side. And similarly, on the intermodal side, went from about $2.90 to $2.15 in that same time frame. So it seemed like some of these intermodal spot rates have adjusted to where the truckload market is. And then the other thing that stood out was some of these backhaul lanes where the containers are being moved back to the port. You think about something like Chicago to Seattle or Dallas to LAX, sort of those places. The spot rates have really come down 30 or 40%. So it seems to be kind of giving the shippers an incentive to move via intermodal back to the ports as a way to get the containers repositioned, while also capturing a little bit of the economics on some of the backhauls, so they don't have to be sent back to the port empty. So that's what it appears is happening to me. But it seems like it's an opportunity for growth in intermodal. I think it's an opportunity for shippers to use intermodal a little bit more heavily, because it does seem like there's plenty of domestic intermodal containers. I think the one thing that stood out from the latest round of earnings calls was, J.B. Hunt talked about how they could handle, at least 20% more intermodal volume with their current fleet of containers. So they don't seem to be, constrained at all. Don't seem like they will be in the near term. So definitely something to think about for shippers that run in some of these dense lanes.
Yeah, I mean it's interesting, as I think this almost takes this episode kind of full circle. We started talking about at the beginning of the show our conversation with Echo at the Future Supply Chain, and I would tell everyone to go check out that full episode that is on our YouTube page now, and you can get the full chat with him. But that was actually a big part of our discussion, right? Is looking at these different modes that are available to shippers out there and helping them strategize where and when they can utilize that a little bit more. And it's interesting that you find that the a concept of what's happening in the markets with the carriers or the truckload carriers, right? Because I think that showcases that right there. It's, we talk about what shippers are looking for. Again, it's these partnerships that are going to help, I think, even teach them how to do that with the market more and more, and be able to, plan out, especially if avoiding kind of the inventory issues that they've had in the past, what different modes might help contribute to not having those issues in the future. So yeah, it's interesting. You always have data to back that up, that the fact that shippers themselves are considering how to use intermodal as a play, and clearly it is a little bit slower, but I think in some situations you look at where the truckload market is, and it makes financial sense to move it to a different mode as well. So talk about, again, trends that we're seeing from shippers. I would highly suggest you go check out that episode from last week, because we get into that exact discussion for a good period of time with Zach.
Yeah, and I would really just recommend going through the site, going through FreightWaves, looking at all the articles. And some of the editorial staff writes up a little synopsis of these sessions. So if there's something that you don't want to invest the full half hour, you just kind of write up the snippet. On Kingston and Noy Mahoney write up a lot of these articles, and then if you want to view the whole thing, we are going to put all these on YouTube under the FreightWaves YouTube channel. Some of those go out throughout the week, so I don't know that they're all up right immediately, but they'll be up sort of periodically in the next few days as they are as they're edited. But yeah, good keynote address from UPS. In particular, any others that stood out to you?
Well, on this topic too, Kingston had a great one as well on the future of rail and how it'll be used too. So if that's a topic that you're interested in, which sounds like our audience is from those replies, then definitely go check that out as well. But of course, make sure you join our community. So go to freightwaves.com, click on newsletters at the top of the page, join the Stockout. It's right there in the middle. It's impossible to miss, and you'll get that newsletter from us every week as well. And go check out our events page too. We of course have F3 coming up in November, and I'm sure the Stockout will be there too. So until then, I guess we'll see you all next week.